It's possible that Bitcoin will reach $90,000 before the end of the year. If you look at the relationship between Bitcoin and the world M2 money supply, which isn't the best way to measure money supply, but is one of the most common ones, you'll see that Bitcoin is about 70 days behind M2. They have really taken off like a rocket ship when you put them on top of each other. Extrapolating that out, you're about 70 days behind Bitcoin, so you should be able to reach your price goal of $90,000 before the end. The change in quantity is very important because it gets Bitcoin ready for its next bull market. Joe points out that Bitcoin has gone into strong bull markets in the past after periods of calm like the one we're seeing now. The 6-month mark after halving is coming up, and Bitcoin's cyclical nature makes Q4 a likely time for good performance. This sets the stage for a possible rally. October and was fueled by more cash on hand and a positive outlook for the world economy. Global liquidity, which shows how much money banks can hold, keeps going up. More money is flowing into financial markets because more debt is being issued and companies need to buy it. When there is more liquidity, more money flows into risky products like Bitcoin. Joe thinks that risky assets will do very well in Q4 because central banks around the world are lowering interest rates and balance sheets are growing. Bitcoin could hit as high as $90,000 by the end of the year. Take a moment to like this video, subscribe to the channel, and set your alerts to receive more videos like this. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks and have fun with the movie. Bitcoin and other cryptocurrencies are of course macro assets. They are affected by the global macroeconomy, the economy as a whole, and other assets as well. However, they also have their own factors that make them rise and fall. Bitcoin supply plan was cut in half in April of this year. So now every 10 minutes, 3.125 Bitcoin are being sent out instead of 6.125. That 50% drop will definitely have an effect on Bitcoin's price. The average price has to go up if demand stays the same and supply stays limited. This is just basic supply and demand 101. So after a halving, Bitcoin's price usually goes up for about 6 months after the supply schedule drop starts. And now we're 6 months away from cutting in half. We're getting close to 6 months. Because of this, Bitcoin has its own reasons for moving around a lot. But over the last 6 months, there has been a change from short-term to long-term holders. This is what has caused these wild up and down swings and this boring but choppy consolidation. In this case, someone with a Bitcoin that is less than 3 months old is called a short-term user. During bull markets, these buyers get a lot of attention. If the SP 500 is going up and your grandmother calls to ask if it's time to buy, that's an example of a short-term buyer. The same goes for someone you talk to at work over the water cooler who wants to know whether they should buy X stock or Y stock. That is a short-term holder. This type of risk-taking person who gets involved in a bull market because of the excitement and mania that comes with it. That's what made Bitcoin hit its all-time high of about $74,000 the first time. More short-term buyers came into the market and bought more Bitcoin, which caused that to happen. In the 7 months since early March, when Bitcoin hit its all-time high, there has been a redistribution from short-term holders to long-term holders. This has happened as short-term holders sell to longer-term holders older than 3 months who plan to hold their Bitcoin for a very long time, and as coins that are 3 months old start to become older than 3 months. This means that during this time of consolidation, there has been a shift in the supply of Bitcoin from people who are more likely to sell to people who are more likely to hold on to their Bitcoin longer term. So even though it's been bumpy and dull, it's good for the market because it's building a strong base for Bitcoin to rocket from as we continue the bull market, which is very likely to happen in Q4 given the way global liquidity is trending and the global easing cycle. And the fact that October and November are two of the best months for the US in terms of Bitcoin. Bitcoin could definitely reach $90,000 before the end of the year, as long as the things I just talked about hold true. The global easing cycle continues, monetary liquidity or global liquidity continues to grow, and the US economy stays strong, robust, and resilient. If you look at how Bitcoin is linked to the world M2 money supply, it's not very good. The measure of the money supply, but it is one of the most common ones. Bitcoin seems to be about 70 days behind M2. They have really taken off like a rocket ship when you put them on top of each other. To give you an idea of how far that goes, you're about 70 days behind Bitcoin. Your price goal is to reach $90,000 before the end of the year. And no, it's not financial help. There are a lot of other things that come into play. But I think that the very positive macro setting along with Bitcoin's natural strength will cause it to rally very hard into if the economy stays strong. Risk markets will react positively to the Fed's rate cuts. We've seen risk assets hate it every time the Fed has cut rates when the economy has been bad. People start to sell off their assets, and there is a flight to safety. As a result, treasury rates drop as more people buy bonds and get out of risky assets. That is not good for Bitcoin or other risky investments. The first thing I want is for the economy to stay strong. Now I'm going to look at the world easing cycle. Now, more than 60% of central banks around the world are loosening up. In fact, the rate cuts that are happening now are the same number of basis points that they were during the Great Recession. There are still growth in the global economy, but we are cutting at the same rate as the last time there was a huge global slump. To me, that's a very good sign. We are cutting while the economy is already growing, which means that financial conditions are getting looser from where they were already quite loose. That tells me once more that risk assets are in high demand. The third thing is world liquidity. That's why world liquidity, or the amount of capital that can be used, is going up. On both the government and individual balance sheets of the United States, this is the value of the balance sheet. Another big reason for this rise is the speed with which debt is being issued by G7, G10, and G20 countries, not just the US. We are taking on more debt than ever before. That bill has to be paid off by someone. It's bought by private banks. Of course, the Federal Reserve also takes in some of it. That makes balance sheets bigger because more collateral means more loans can be made. In the end, that makes the world's money supply grow, which is good for risky investments. Not only are central banks lowering interest rates, but balance sheets are also growing. This means that the US economy and most other economies around the world, except for China and Japan, which are both having economic problems, are growing. If I look at those three things, they tell me that Q4 will be great for risk assets. And of course, Bitcoin, which is a very sensitive and high beta risk product, will do very well going into Q4 if all of those things stay the same. As time goes on and Bitcoin's market cap gets closer to that of gold, Joe thinks it will start to trade more like the hedge against inflation and global risk it was created to be. But Bitcoin is still a risky investment for now. Very affected by the state of the world economy. Joe talked about a few risks that could affect how well Bitcoin works. One risk is that investors might sell Bitcoin in favor of safer investments like gold or US treasuries if geopolitical tensions rise even more. On the other hand, he thinks that more loose monetary policy and capital coming into the US could help risky investments like Bitcoin in the long run. But there's always a chance that people will sell Bitcoin to buy other investments that are thought to be better. You and I both know that Bitcoin is the safest product out there. It's very hard to find. It has nothing to do with politics. To be honest, it's what you want to hold when there is trouble in the world's politics. That's not how the market trades it now. When you look at connections, it's not